What is spread? The spread of an asset is the difference between its bid and ask price. An asset could be anything such as currency, shares, commodity, security, service, or contract. A bid price is the highest price a buyer is willing to pay for an asset, while the ask price is the lowest price a seller is willing to accept for an asset. For instance, if the bid price of a car is $1,000 and the ask price is $1,100, in that case, the spread will be $100. The spread goes to the market maker, who is responsible for pairing the buyer and seller of the car. This could be your dealer or the marketer. In trading, the market maker is our broker. The simple way to know the spread of an asset is to subtract the ask price from the bid price. Let's do that for this asset here. As you can see, my brokerage firm uses the 5 decimal places. Ignore the 5th decimal place when calculating the spread because it is the pipette. 10 pipettes make 1 pip. Therefore, subtract the ask price of 1.0590 from the bid price of 1.0590. As you can see, I have 0 spread, which means my brokerage firm is not charging me any spread on Euro USD currency pairs. Unlike some other brokerage firms, they might charge you starting from $3, even up to 5, 6, or 7, or even more spread. High spread charge will eat deep into your trading account and profit and also add to your losses. Be careful of dishonest brokerage firm that charges high spread. As a trader, ensure intensive research before depositing and start trading with any brokerage firm in the financial market. Are you interested in trading and investing with an honest and low spread brokerage firm? Use the link in the description of this video to access one of the most sincere and low spread brokers in the financial market.